Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. Really been quite a historic and volatile time out there in the financial markets after the Brexit vote from the UK last week. Most people going in, well, certainly most market participants going into the vote expected a small majority for a Remain. And that appeared to be the way of it as the pound sort of traded up quite aggressively as polling came to an end on last Thursday. Obviously, as we now know, that wasn't the case, and the Leave vote gradually gained momentum over the course of the night as the results started coming in from the UK, and really quite a dramatic fall took place in financial markets last Friday, and that's obviously continued this week as well. Obviously, really what it just does, it just adds to the uncertainty out there. Really it takes off the table any sort of Fed rate rise coming forward in maybe July or August. Certainly for the time being anyway, if markets do sort of calm down, then potentially that might be back on the table, but again, it probably has to be backed up by the data. Certainly the last non-farm payrolls were pretty weak in the US, only around 35,000 compared with a sort of 12-month average of around 200,000. So it'll just be interesting to see the data coming through, but the markets really need to settle down and get a handle on what's really sort of taking place. Obviously, adding to that in the US, you've got the US elections. And at the present, Mr. Trump seems to be running into a few more difficulties, maybe on the sort of funding issues, but also as well just trying to sort of galvanise the Republican Party. He really just seems to be sort of driving a wedge between party members. Obviously in the UK it's all sort of speculation on what the sort of Brexit may or may not mean. Most economists are the view that certainly the pound heads a lot lower, currently around the sort of low 130s. Most sort of investment banks and analysts are predicting a figure probably low 20s, 120 versus the US dollar by year end. And then obviously the implications for the UK economy. Again, most analysts and economists are predicting around sort of 1 to 1.5% fall in GDP. Probably a shallow recession coming in the UK. And if not a recession, maybe growth is only going forward to sort of plus 0.1 for next year, and then picks up a little bit in sort of 2018 to maybe sort of 1 to 1.5%. But certainly, pretty sort of nervous times. Also raises some issue as well about the UK in general, because certainly Scotland voted unanimously to remain in the euro, and obviously if the UK does look to leave, as the vote indicates, then Scotland will more than likely seek a further referendum on independence and will look to try and remain in the EU, and that could well see the breakup of the United Kingdom as we know it. Again, market implications for that, it's all sort of speculation, but it will be really pretty interesting to see how it all sort of pans through. Here in Australasia, we've got the Australian general election as well. Parties running sort of neck and neck, but sort of feeling is that Mr. Turnbull will probably just keep the government by a sort of narrow majority. By now you should have got all your KiwiSaver contributions in to make sure you get that maximum tax credit. So if you are still uncertain on that, call us on 0800 867 323. What does Brexit mean for New Zealand? Again, potentially it just sort of heightens the issue for a rate cut. But obviously, against that, to sort of counteract that argument, you've still got a pretty rampant housing market, and the Reserve Bank is very, very aware of that, and really doesn't want to sort of stoke that market even further into a massive sort of bubble. And in these volatile times, if you are concerned about your portfolio and just want a little bit of guidance, a little bit of reassurance, so call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.